Good morning, ladies and gentlemen. It's a pleasure to be a part of the this initiative, which has been organized by the Economic Times, one of the leading financial dailies of this country for decades now. And the Economic Times and the Times of India group have always heavily leaned on the side of liberalism, whether it is with regard to freedom of speech and expression or whether it is regard to economic thought and philosophy. That's been a constant strain which has run through their editorial direction, now going back many, many decades, even at a point in time when India was completely socialist and a command economy. The subject of today's deliberations is freedom of consumption, rewiring constraints. And I don't think there could have been a far more appropriate or a far more germane subject which needs to be discussed in the context of what has happened today. But to step back a little, I think it's important to reflect upon what are the fundamentals of an economy. And the fundamentals of an economy are savings, investment, consumption, and employment. And unfortunately, in India's context, all these four fundamentals are today under a very grave strain. And the genesis or the roots of this strain does not lie in the COVID-19 pandemic alone. It goes back to the misconceived demonetization of 2016, which delivered a body blow to the entire economic construct of India. It was further exacerbated by a very badly rolled out goods and service tax regime, which had the which was able to almost cripple the non-formal economy in this country. It is important to remember that while India may be a $2 trillion formal economy, it rides on a $2 trillion non-formal economy. And so therefore, what any government should do or should have done is actually found a pathway to dovetail the non-formal economy into the formal economy rather than killing it. So therefore, this was the backdrop of the pandemic, which hit us and hit everybody else in the March of 2020. And obviously, the whole world came to a complete standstill. At a certain point in time, almost three-fifths of humanity across the globe was in some kind of a lockdown or the other. And the consequences were devastating and horrific, both in material and as well as in human terms. For maybe at least once in our lifetime, we actually saw oil prices plunge to negative. And if it wouldn't have been for the historic agreement between the majors in the oil industry, you wouldn't have seen a recovery of oil prices given the manner in which they had gone south in the April and May of 2020. But the one thing which COVID-19 has done, and this is something which should be worrying for economic planners all across the world, is that it has brought about a structural shift in consumption patterns. The entire neoliberal economic construct is premised on the fact that people would consume primarily out of a certain voraciousness of choice. And that would keep the wheels of the economy turning, that would keep the revenues coming in, that would keep the employment numbers up, it would keep the investment numbers up. And therefore, even if with a historically high savings rate, which India has, if the rest of the fundamentals keep clicking, primarily based upon the very high consumption paradigms that we have seen since the economic liberalization of 1991, the Indian economy would continue to chug along at a very healthy rate of growth. But unfortunately, the COVID-19 pandemic has questioned this very fundamental premise itself, because suddenly people have woken up to the fact, and not because they are economically constrained. But I think the COVID 19 pandemic gave people the opportunity to really reflect upon who we are as individuals, who we are as people, and how much that is it that we actually require to lead uh, a fairly satisfying and a fulfilling life, both in material and in moral terms. And so, therefore, the endless cycle of consumption that you saw earlier, consumption for the sake of consumption, I think there has been a structural pause with regard to that. And that's something which is going to play itself out in the medium term, even in the long term. The impact may not be visible very soon, because there may be a post COVID rebound, which all of us may feel very happy about. And we just may end up missing the wood for the trees, the underlying change in human behavior, which COVID 19 has brought about. And therefore, for any economic planner, and especially the finance minister of India or any of the emerging countries, this is going to be a challenge. And unfortunately, all the palliatives which have been applied, they are really supply side palliatives or supply side solutions rather than demand based solutions. So, till the time demand is not stimulated, till the time people do not start spending as they were earlier, as long as you are not able to break the COVID induced hesitancy and insecurity in terms of being, in terms of stepping out beyond your plate to really try and get back into the earlier mode of consumption, I'm afraid consumption is never going to get back at those levels. And that's why it is important for the finance minister to really see if cash handouts, if material support, especially in the agricultural sector, which has been hit by the second wave of the COVID 19 pandemic fairly ferociously, and those numbers are not really appearing in the public space. And that's why newspaper after newspaper has been running stories about the levels of underreporting of COVID 19 deaths. So, if you directly put money into the hands of the agricultural community, far more than what you're doing under PM Kisan, etc., since the agricultural sector had really escaped the first wave of COVID 19, it had done reasonably well. It could really set the wheels of the economy turning once again. It would stimulate consumption primarily because that is one area where 65% of the population of this country still depend upon for their livelihood and for keeping the body and soul together. So I think the time has come to really look beyond the middle class, to look at the real India, which resides in the 630,000 villages of this country, and government must try and reach out to them, ensure that they put money into their hands. So therefore, the consumption levels, when they are going to go up on a macro basis, if let us suppose 1 billion people across this country start spending a little more, it would automatically stimulate and boost your manufacturing, and the economy would start turning again. So I think rather than take a very myopic view of trying to target those who traditionally have been the larger spenders, or who had disposable incomes at their disposal, the great Indian middle class, or parts of the middle class at least, which have been upwardly mobile, there needs to be a paradigm shift, and there needs to be a relook at how structurally we can boost consumption so that the economy can get back on track. Because given the kind of population numbers that we have, given the kind of numbers that, given the kind of people who come into the mainstream of the economy on a daily basis seeking employment, till the time the Indian economy does not go back to a robust 8 to 10% rate of growth, and I'm not talking about mythical numbers based upon a very low base rate, which may manifest themselves over the next year or two, because the GDP growth has been, in the negative, minus 7.7. Some people actually put a higher number to it. If we want to get back to real substantive growth paradigms, then we must ensure that consumption starts coming back on track. And consumption will only start coming back on track when there is money available directly in the hands of the people. There are far more learned and erudite people who are participating in the summit. You would hear from them. But this is what my two bits of input to this very eminent deliberation is all about. I once again thank the Economic Times. I
I
once
think
again
10
thank the
seconds.
Times of India Group for
Okay.
inviting me and giving me a chance to share my thoughts and views with all of you today in the morning. Have a great day.